Hello and welcome to this Wednesday's morning market briefing. We've got a lot to talk about, but firstly, Eurozone economy flatlines in fourth quarter, as well as that Hamas studies proposal for 6-week pause in hostilities with Israel. We've got lots to talk about in the charts also, with lots happening on the economic calendar, but we'll come to that near the end, so make sure you stay around so you can see that. Before we get straight into it, make sure you subscribe. The first article to talk about, of course, is in relation to the Eurozone. Now, yesterday's data release showed that the Eurozone economy had stagnated in Q4 of 2023, and this followed shrinking German output and stalled levels of French growth. Now, obviously, we've been on the topic of Eurozone growth and growth within the global economy as a whole. And generally, the way we've seen it coming out of COVID in the period of inflation, which has led to the high interest rates that we're experiencing now, that period that we're in at the moment has led to many economies in the West, the traditionally advanced economies, struggling. With the US actually emerging as somewhat of a bright spot within the global economy, where we have seen nations like the UK as well as the Eurozone economy also stagnate greatly in the face of this kind of high inflation, high interest rate period. And this would be, an expected kind of factor of those higher interest rates. You're trying to slow down growth to try and bring down that inflation by, settling that consumer demand and, maybe even reducing supply somewhat. But ultimately, what we have seen is a complete flatline really for the Eurozone economy, and a similar case for the UK, whereas the US has kind of reigned supreme throughout kind of global economic sphere at the moment. That said, of course, China is, despite its own economic issues, is still emerging as a more growing economy, if that makes sense. But that said, it is considered a developing economy, and that's why we are kind of seeing that difference in figures. Ultimately, though, on the topic of the Eurozone economy, when we've been talking about the issues to do with the Eurozone economy, or even just talking about, Eurozone growth as a whole, we've mainly been on the topic of Germany, and that is for a good reason, of course. Germany is the largest economy within the Eurozone as a whole, and therefore is arguably the most significant within the kind of economic bloc. And what we have been seeing with Germany as a result of these higher interest rates and higher fuel costs as a result of Russia's invasion into Ukraine is a massive drop in production, especially within those key industries which Germany relies on, with those being, the manufacturing of automobiles as well as their construction industry, both of which have received kind of serious contractions in their levels of output, and as a result this is weighed on the German economy as a whole. And if we're seeing kind of contractions within the German economy, what we then likely to see across the rest of the Eurozone is contractions as well. So despite maybe some smaller nations not dealing with inflation as poorly as Germany, or even seeing a greater amount of growth, Germany's lack of growth has brought the Eurozone kind of GDP figure down. So that's the key thing to note in regards to Germany, and that's why we generally are talking about Germany when talking about Eurozone growth. As for the Eurozone economy as a whole, we of course have other important nations such as France, and others, but ultimately France's economy has not been doing too good either, kind of seeing the same issues as seen in Germany, and therefore not kind of picking up the slack where Germany is falling. As we'll talk about in the rest of this article, though, there are some nations which certainly have picked up the slack to even make the Eurozone just flatline, which is quite a surprising thing to see. The Eurozone economy basically was requiring and relying on some smaller and traditionally more weaker economies to basically prop up that figure, so it's like a neutral figure of growth. So that's very interesting to note. What will be interesting to see, though, is how this Eurozone figure does now go on to influence the ECB's policy making decisions, as as we do know, the understanding of the growth of a nation's economy is essential for the formation of monetary policy. And therefore, if we are looking at the Eurozone economy as flatlining at the current moment, we could see extra pressure weigh on the ECB to bring down interest rates earlier. This has been a key topic within those advanced economies central banks such as Bank of Japan, Bank of England, ECB and Fed. We have mainly been talking about when interest rates will come down, and the Eurozone economy as one in particular, the ECB has actually been the kind of central bank which has been expected to drop interest rates the earliest, beginning in March, with recent figures in the US kind of pushing back the date that we were expecting the US to kind of start cutting rates. And the same can be said for the Bank of England, except it's even worse with the Bank of England, with the expectations for rate cuts beginning even as late as July and that kind of thing. So very, very late for the Bank of England. But the Eurozone economy is one which we're actually expecting interest rate cuts sooner. And this kind of continual economic data presenting a lack of growth, a lack of strength, and great weakness within the Eurozone economy is adding more and more pressure and stress to the ECB to start cutting rates earlier, despite maybe inflation not being at that target level just yet. That said, the Eurozone is also aided in the fact that it does have generally a lower inflation figure than the US and UK. That's kind of the general summary, but ultimately this article goes on to explain that despite this stagnation, certain Eurozone nations presented strength, with economic rebounds in Spain and Italy offsetting some of the weakness in the Eurozone economy. The stagnation figure of the Eurozone growth was better, however, than economists' prediction of minus 0.1. So they were expecting a contraction, but we did not see that. So, going back on my other point in relation to when the ECB may cut rates and how much pressure this figure will put on the ECB, if we are seeing, the figures still come in above expectations, this could actually relieve pressure, which is it makes it kind of hard to, kind of guess what the ECB might do, because we are seeing, weak figures still. Neutral is still a very poor figure, but that said, we're coming in above economists' expectations, so we should have probably expected the ECB to have already factored in those forecasts. So therefore, maybe this is less pressure on the ECB. So that's something to take note of. But ultimately, the recent figure came off the tail end of a 0.1% decline in Q3, with the figures culminating in the Eurozone economy growing 0.5% last year. The lack of growth in the Eurozone has meant the US has reinforced its position as the global economic bright spot, growing 2.5% last year. The weakness of the Eurozone economy is being pinned on Germany, whose economy contracted 0.3% in the period, with Germany struggling in the construction and manufacturing sector. French GDP also stalled in Q4 in a similar fashion to Q3, where the economy grew only 0.1%. Italy's economy was a bright spot in the Eurozone, expanding 0.2% in Q4, thanks to strong industrial output in services as well, which negated some of the lack of domestic demand within Italy itself. Now, the Spanish economy was similar, growing 0.6% in Q4, which is its strongest all year round. This came following rising domestic demand and therefore more sales, of course. Now, investors are watching to see if inflation can decrease in the Eurozone, with economists expecting inflation to drop to 2.8%, which is down from 2.9% before in last month. So that's to keep your eyes on. That's the thing that's to note now, is that inflation figure, which we are getting this week. So listen out for that. That's all to talk about in this article, a long one that we spoke about. Next to talk about is Hamas. Now, Hamas has stated that it is looking into another temporary ceasefire with Israel. This ceasefire would free hostages in Gaza in a swap for Palestinian prisoners and aid into the area. Now, this is a topic of great conversation at the moment, largely because of how it relates to world tensions. As we've been seeing, this conflict, which obviously began following the October the 7th terrorist attack by Hamas, has led into a ground, air and naval operation into the Gaza territory by the IDF. Pardon me, sorry. My nose has just gone a bit funny, but ultimately that is what's happened. And as a result of that, we've seen a kind of fallout across the Middle East with certain militant and militia groups kind of, spreading or representing their support for Gaza and Hamas through terrorist attacks on Western powers. And we've recently seen that take place on a Jordan base, a US base in Jordan, where we did sadly see 3 US soldiers killed in, kind of on tour, basically on operation, whilst they were on base by a Hezbollah affiliated group. Which was based in, of course, Iraq and Syria. And that's what we've been largely seeing across the Middle East. This is not the first time we've seen groups like, the factions of Hezbollah and other factions funded by Iran attacking US troops following the October the 7th massacre. And as well as that, we've obviously had the Houthis, which are also funded by Iran in Yemen, also attacking civilian ships, and just recently hitting a British-owned merchant vessel with a missile, and as a result causing it to set fire and forcing the crew to abandon ship. So it's kind of been causing havoc across the Middle East, these kind of groups funded by Iran, which have been attacking US bases and allied forces bases. And ultimately, this is the fallout which has arisen from this conflict, which is why it's so important to stay on top of, because if this does escalate and turn into a regional conflict where, let's say, Saudi Arabia is pulled into it, we could see, a complete fallout in the oil exportation industry from that area. And as a result, see oil prices dramatically rise to the upside, which of course would have dramatic effects on, inflation around the world, as the price of fuel would go up dramatically. And that's the kind of key thing that we've been talking about. Not only that, but gold's price would also be on the upswing, just as a result of being a safe haven asset. So that's why these topics in relation to world tensions always have such importance in regards to markets. Now, going back onto the topic of Hamas specifically, we've been covering this topic, of course, since the October the 7th attack, and since then we have seen a temporary ceasefire take place. However, this was cut short following, an exchange of prisoners, Palestinian prisoners and Israeli hostages. But since then, we have seen Israel return to its ground operations into Gaza in its operation to eradicate Hamas from its leadership position within Gaza, and essentially, eradicate any terror abilities from, the Gaza Strip. As a result, we've obviously seen a great humanitarian fallout, with many, many civilians dying as a result, and a great cost, of course, to Gaza's population. And this has kind of caused certain levels of international condemnation from certain nations, especially whilst we have seen certain nations like the US and UK maintain diplomatic support and even military support for Israel. So that's why, this is a topic of discussion at the moment. Now, this all comes following officials from Qatar, Egypt and the US meeting in Paris for discussions. The temporary ceasefire would last for 6 weeks, and the effort follows a lack of mediation between, the two powers. This proposal will not guarantee a permanent truce, and even if agreed upon, there will need to be a good deal of discussions over the implementations of the plan. It was Hamas's political leader who said that they were in the process of studying the proposal. Hamas's political leader, pardon me if I pronounce this wrong, Haniyeh, has been invited to Egypt to discuss the proposal, with mediators hoping that if the proposal is agreed upon by both parties, during the 6 weeks of temporary ceasefire, a permanent ceasefire can then be agreed upon. The chance of this proposal to actually be agreed upon, however, is kind of, in contention, ultimately because Netanyahu has ruled out the withdrawal of IDF personnel from Gaza, as well as the exchange of Hamas terrorists back to Hamas itself. Now, Netanyahu is, however, receiving increasing pressure to secure the release of the remaining hostages in Gaza, and that's what we've seen from the Bring Them Home movement in Israel, where relatives of these hostages are fighting essentially for a ceasefire so that these hostages can be exchanged and brought home. That's all to talk about in the articles, though. We spent a lot of time on that. Next to talk about, of course, is the charts, where we do have quite a bit happening to note, of course. And to begin with, we are on the US 30, and we're talking about US indices as a whole. But as I'll come to in just a second, certain US indices are kind of diverging from one another, which is why it's kind of maybe important to address this kind of chart of the US 30 separately to maybe the Nasdaq. Now, on the US 30, however, we are seeing crazy bullish momentum to the upside, and currently we are making all-time highs. In every bullish candle we do make breaking above the previous high, we will be making all-time highs on the chart, and this continues to represent that growing US equities momentum. And this is obviously also coming off the back of, a few months ago, the Fed changing its, monetary policy stance to becoming one which is far more dovish. And we've been looking at earlier, basically, rate cuts since then. And that's why we're kind of seeing the US 30 kind of push to the upside now. We have now broken above that minus 27.2% Fibonacci extension level, which of course would be the usual sell-off point after coming into contact with that 38.20 that we did see. So, how far the US 30 can now go before a retracement, it's hard to tell, but definitely keep your eyes on that. Next to talk about is the Nasdaq. Just quickly, just to note the fact that we are seeing a divergence between the industrial stocks of the US and the tech stocks of the US, as on the Nasdaq we are seeing a kind of sell-off from the all-time highs as the price does continue to range and kind of consolidate. So keep your eyes on the Nasdaq as well. Next to talk about is the dollar, which is continuing to range, and this is obviously in the lead up to the Fed's interest rate decision today, where we will be hearing from Jerome Powell and other Fed officials in regards to the US's monetary policy. And this is why we're kind of seeing the dollar range. It's because banks are kind of getting in their hedges to the upside and downside as they prepare for the key news that we are receiving today. So wait till we get that figure later today. That's going to be very, very important, and we'll be pushing the dollar to the upside, downside, or or keeping it where it is. So definitely keep your eyes on the dollar. A lot of volatility to experience today, and some key levels on the charts to definitely note. Next to talk about is Euro USD, and obviously off the topic of the dollar, the Euro USD will be reacting greatly to that dollar news that we are receiving today as well. So Euro USD and dollar, very important to keep your eyes on in regards to that Fed interest rate decision, as well as that we are getting some key Eurozone data today in regards to German and French inflation, so that should also be playing into the way the euro moves, so keep your eyes on all of that. Next to talk about is pound yen, where we are seeing a kind of sell-off from that all-time high and key resistance level on pound yen. That said, it's not a massive sell-off, and we're not seeing too much momentum to that downside move. So maybe we could just write this off as just a lack of momentum. And that's why we're kind of seeing a slow move to the downside. So keep your eyes on pound yen nonetheless. Next, talk about is Bitcoin, where we are seeing a continuation of this bullish momentum. An interesting level to note, though, where we are heading towards is this liquidity level, which kind of represented the top of this previous range. Maybe price can react to that, but currently it's around this kind of double top level, and it does seem that price is kind of reacting to that. So keep your eyes on Bitcoin as well. Next to talk about is gold. Obviously, as we're experiencing a great deal of world tensions, we are seeing gold in a very, very interesting spotlight, and we did kind of see some spikes following the news in regards to the Jordan US base being attacked, where we did see a kind of upside move. And certainly the Fed's interest rate decision and rhetoric today will be moving gold to the upside or downside. We have to remember that gold is usually used as a hedge against the dollar. So if we're hearing news about earlier rate cuts than expected, we may see gold make a rush to the upside. So keep your eyes on gold. Lastly, to talk about in the charts though is oil, which is very, very important considering that the recent news in regards to Jordan and news in relation to the Middle East as a whole is heavily influencing oil, as a result of the risk of regional war. As if regional war does take place, we will likely see oil's price skyrocket as a result of falling exports from those key oil producers. That said, we have seen retracement now on oil from that key liquidity zone, and prices come into contact with that previous high and liquidity level on that 38.20 fib. So maybe we're going to continue to the upside now. Keep your eyes on all of that. That's all to talk about in the charts. So we'll get through the economic calendar quick, but ultimately we have a lot of economic data coming up today. So listen out for all of this. But firstly, we will be getting Aussie inflation rate figure, as well as the Chinese manufacturing figure. Followed by that, we're getting the Japanese consumer confidence figure, and then the German and Swiss retail sales data. Followed by that, and very importantly, we are getting German and French inflation rate figures, along with the German and Italian unemployment rate figure. So very, very important Eurozone data to note. As well as that, we're getting the Canadian GDP figure. And finally, and most importantly, of course, we are having the Fed's interest rate decision today, along with their press conference. So that'll be important for the US's monetary policy. And just quickly, we'll have the Aussie manufacturing figure being released today. But that's all to talk about on the articles and charts and economic calendar. We've covered a lot on all of them. But I hope you have a great trading day this Wednesday. Listen out for all that data and have a great one. See you later. Bye.